and welcome to Planet Economics. Today we'll look into Australia's recent exchange rate history and you.
From the gate now. Everything around me. Green, get the money. Dollar bill, yo.
So, in the summer of 1983, the Hawke government decided to make the move from a pegged exchange rate to a new floating exchange rate. This is due to the collapse of the Bretton Woods system, an exchange rate system between 44 countries, where all exchange rates were pegged against the reserve assets of the US economy. The Bretton Woods system collapsed due to the depletion of the US reserve assets. This new floating system allowed for greater liquidity of assets between all of the trading countries. In the floating system, all currency is traded on the foreign exchange market, except that's not to say that although it has its benefits, it also doesn't come with its cons. The problem is, it also means that the currency is subject to speculation and problems from things such as natural disasters and rumours about the value of the currency. The Australian economy works under a managed float, wherein if the currency is subject to too much depreciation or appreciation, the Reserve Bank will step in to stabilise the economy.
Now onto the Australian dollar in the 21st century. In April of 2001, the Australian dollar reached an all-time low of 47.5 US cents. This was due to a number of reasons. Firstly, there was the Asian financial crisis, which hit in the late 90s. Due to Australia's strong ties with its trading partners in Asia, this affected the exchange rate, causing it to depreciate. There was further depreciation when the dot-com bubble burst. The dot-com bubble burst due to overinvestment in a lot of internet-based companies. This further led to a crash in the Nasdaq, which led to further depreciation of the Australian dollar. And this all culminated and also was finally worsened once again by the euro being overvalued on its introduction. This meant the Australian dollar was, as said before, at 47.75 US cents. However, this low value of the Australian dollar led to an Australian exports boom! This was a major key to the economic turnaround. This was also helped by the lowering of the cash rate, which incentivised investment. Investment was further encouraged with schemes such as the First Home Buyers Grant.
Too damn high.
This led to a further housing boom! The Australian dollar then once peaked, reaching levels that it hadn't seen since the 1980s, reaching 96 cents in June of 2008.
Oh, hey, didn't see you there. In late 2008, the global financial crisis hit, more commonly known as the GFC. It was the worst thing to hit the US and global economy since the Great Depression of the 1930s. It was caused by speculative investment and a belief that housing prices would always rise, as mortgaged houses were used as security assets. However, once people started defaulting on their mortgages, everything turned into a complete mess. Lehman Brothers and other banks collapsed. There ended up being a liquidity crisis and other such events. It ended up being a cyclical downturn, negative effect. It was very bad.
While the Australian dollar did initially depreciate following the global financial crisis, and the Australian economy did experience somewhat of a downturn with unemployment rising by 1.5%, the Australian economy did manage to bounce back.
Last night took a L, but tonight I bounce back. Wake up every morning.
This was due to the Reserve Bank of Australia, more commonly known as the RBA, intervening to stop the liquidity crisis. Also, the depreciation in the Australian dollar meant that Australia's exports were extremely competitive, leading to a boom in Aussie businesses. This led to the Australian economy and Australian dollar reaching pre-GFC levels within 2 years. Another reason for the appreciation of the Australian dollar was the mining boom. The mining boom that had been going since the early 2000s, pre-GFC, and had continued on strongly post-GFC. This was somewhat due to the increase in Australia's households' increase in disposable income by 13%, which was also helping the Australian economy, but was largely due to foreign investment and also foreign buyers buying Australian commodities. This led to the Australian dollar peaking at $1.10 US cents in July of 2011. This high Australian dollar meant that other businesses which exported were adversely affected, such as manufacturing and particularly agriculture. This, and also eventually other foreign consumers not buying as much Australian commodities, led to depreciation of the Australian dollar. However, this high Australian dollar that was still the case meant that businesses such as Holden closed, citing the high Australian dollar as one of the reasons for their closure. Since there has been a depreciation in the Australian dollar slowly over time. Oh wait, didn't see you there. Anyway, as I said before, there has been a slow depreciation of the Australian dollar. This is due to the fact that it is closely linked to iron ore prices, as the Australian is somewhat of a commodity-based currency. Also, of recent times, there has been speculative investment in products and commodities overseas, such as oil, which have been affected by the crisis in Syria and US and military intervention.
Oh hey, bet you didn't expect to see me again. Now the thing is, although most of the time depreciation is shown in a negative light, it actually comes with many benefits to the Australian economy, as it leads to an increase in investments and foreign investment in Australia. And also, seeing as imports would decrease due to the increased price of foreign goods, it leads to a more competitive domestic market. However, that's not to say that depreciation doesn't always come with its own problems. For example, it can actually lead to the domestic market suffering if imports get too expensive for the raw materials. And also, it can lead to inflation, which makes it harder for the economy to bounce back.
Last night took a L, but tonight I bounce back.
And again, inflation can lead to further depreciation of the dollar, which can lead to the entire economy going in a downward spiral in a similar way that the US did during the GFC.
The gate now. Cash rules everything around me. Green, get the money. Dollar bill,